Hello, everyone. You're all very welcome to another market update here at the Alpha Capital Group. So this week, obviously going to be looking at the data, going to be looking at market movements like we always do. But we've also got a twist this week in the fact that we are now really starting to get the beginning of earnings season for Q1 2023. So tail end of last week, beginning of this week, and over the next number of weeks, we will be reporting in the financial markets all of the major US-based stocks and obviously the performance and how they've done in Q1, 2, 3. So obviously relevant performance because, of course, we know that stock market indices, like we trade the S&Ps, the Nasdaq, the Dow Jones, are all compositions of weighted number of stocks. So, of course, if the stocks are good and bad, that's definitely going to affect indice performance, stock market performance, but broadly, and obviously that's going to have a bifocal effect into other asset classes as well. So it's just about being aware of that, being important, and being conscious of that as well, making sure all information is present. Traders have as much information to hand, so of course it gives them the best decision-making process of hand as well. So I suppose first things first, as we look at today, obviously new week this week. Yesterday overall markets were fairly tepid, a bit lukewarm, really not much happening broadly speaking. Indices were kind of a bit back and forth. The dollar, we obviously had seen that little bit of a dollar pullback into the tail end of last week, and of course we're starting to see that unravel again, which of course is something that we'll be looking at now shortly. And of course we'll be looking at the economic calendar as well. So I suppose without further ado, let's have a look at the economic calendar for the rest of the week. So obviously today, Wednesday, Thursday, really just kind of focusing on data as well, because of course we've got a lot of important data prints. We've got a lot of CPI figures out this week, particularly in UK tomorrow, Canada today, and of course European figures as well on Wednesday morning after the UK one. So we've got a lot of PPI, CPI figures. So of course that's going to factor into price stability, which, as we know, it's something that a lot of the main central banks is looking at. Bank of Canada, the Fed in the US, the Bank of England in the UK, and more broadly as well, the European Central Bank. And of course, those figures will be very much prevalent and relevant as it comes to the next set of interest rate meetings, which is only now a couple of weeks away. So today, along with BOC figures, CPI figures, we do, of course, have building permits and housing starts in the US. So that's obviously something that's going to be particularly interesting when it comes to the growth dynamics. So growth dynamic has obviously been something that we've been very much focused on for the last kind of 12 months or so, regarding, are we in growth, are we not? Markets are still doing okay, but yet inflation is rampant. And of course, higher interest rates means higher borrowing costs and debt refinancing obligations as well in the background. So we just obviously have to be factoring in that. But building permits and housing starts is a fairly interesting data point, because it, of course, it gives us a real idea of construction. So construction in a lot of economies is the backbones. Of course, if you see cranes in the sky, it means there's growth in the economy. If you don't see cranes in the sky, you don't see much construction, you don't see much building. Obviously, that's going to aggregate or conclude to less or a lesser growth environment as well. And I think that is obviously something to be kind of conscious of when it comes from an economical standpoint, but also when you're trading as well, factoring some of these data points, because of course, if you're a short-term trader or a day trader, some of these pieces of information can lead to a lot of intraday volatility as well. And it's just about being paramount and being conscious of that as well in the back end. All right. So with that as well, today we obviously have a number of speakers. We've got Bowman out of the US. We've got Rogers and Macklem, top dogs in the BO Canada out as well. And of course, we'll have Elderson, apologies, in the ECB as well. Tomorrow, we've obviously got CPI, PPI data, retail price indexing data out of the UK. So you'd expect a little bit of volatility there into the 8 a.m. London Open. Then, of course, 10 o'clock, we've got German and European data with Lane and Schnabel also speaking tomorrow as well. Tomorrow evening, of course, we do have the beige book as well. So Fed beige book is also an interesting data point, because of course that's going to allow short-term volatility into tomorrow night's runoff and into tomorrow's close as well. All right. So worth kind of keeping an eye on that broadly as well. And then of course Thursday we've got a Chinese interest rate, the PBOC interest rate decision, and of course we do have some overnight data in the Asian markets as well. So that's where we are from a data perspective, from an economic calendar perspective. But as well, as I said, let's now look at the earnings calendar. Of course, if I guide you over to this secondary document, now of course we've put this into our Discord community, so traders actually have this information to hand as well. If we share this document very quickly, it gives you the dates for all of the different stocks when they are reporting earnings, when they're reporting the next obviously data point. And you can see it obviously last week we had a few banking institutions, obviously JP Morgan, Goldman Sachs. Your banks tend to be the first one out of the gate. Then you'll have some of the other minors, healthcare sector stocks, and then of course you start to lead into the major ones like your primary composition weighting ones, like your Microsoft, your Nvidia, your Tesla, so on and so forth, and obviously your Microsoft, Apple, Netflix as well. Some of those other bigger stocks as well. All right. So as we know this week, today obviously being the 18th, we've Unilever this morning in the UK, Tesla tomorrow, IMB tomorrow, ASML tomorrow. So really not too many today. It obviously takes a couple of weeks to kind of go through all of these, but we know the bread and butter ones are Amazon, or Apple, or Microsoft, because they are the ones that has the primary weighting in the major US composition index as well. So you look at the S&P 500 composition index, or you look at your Nasdaq composition index, and of course that'll give you your primary weighting. And of course, if you use a website like Slick Charts, which we'll show you now in a second, you'll be able to navigate around what are your primary assets. And then, of course, you should really then be focused on, well, the ones that have the primary weighting are the stocks that are going to be really important for the markets as well. And it's just about being recognizing of that as well. So I think your bigger ones down here, your Apple, your Amazon, your Google, are reporting 4th of May. So you can guarantee that 4th of May, come that night, we're going to have a very volatile day in the markets, particularly if you're trading the indices as well. So just obviously being kind of conscious of that as well. All right. So that is obviously the earnings calendar. I suppose just being wary of that. And of course, let's go back to this Slick Charts website. So this Slick Charts website is something that I kind of mentioned a minute ago. It gives you each stock in all the major indices, so whether it's the S&P, whether it's the Nasdaq, whether it's the Dow Jones, and it gives you the composition weighting. So if you look at the S&P 500, you will see that the Apple stock has a 7% weight in the S&P, Microsoft has 6% weighting in the S&P, and Amazon has just over 2.5%. So you can see combined between the three of them, you're looking at around about 16% weighting, which of course for 3 stocks out of 500 is quite a lot. And then if you bring in the likes of Google as well, which is reporting on the 4th of May as well, you're adding in another 3.5, which is bringing you up to that 20% level almost, which is 1/5 of the S&P composition. If you be more aggressive and you trade the Nasdaq instead, you'll also see there as well very quickly that Apple, Microsoft, and Amazon is approximately 12.5, and just over 6, which of course is 31.5% weighting. So 1/3 of the Nasdaq overall weighting in the Nasdaq is coming from those 3 stocks. You can guarantee that if those 3 stocks underperform, you're going to see heavy selling. You're going to see the Nasdaq sell off as a result because of these 3 heavy weightings in that obviously asset as well. And of course, coincident, all 3 happen to be on the same day as well. So interesting how that one plays out. But of course, this is something that we'll be watching over the next couple of weeks as earnings develop, as the markets unfold for Q2 off the back of Q1's results as well. All right. So that's obviously very important. And of course, for those of you who are aware, we do obviously have our Discord as well. Just a very quick share on that as well. So this is obviously some of the information that's been shared with our community members in the institutional market section. So if you like the institutional side of it, getting more information, understanding more about the markets, we do have regular content flowing in our Discord as well every day under the institutional market tab as well in our Discord server. All right. So that then brings us to now that we've kind of looked at the markets, now it's really time to look at where we are really in terms of the price action. So of course, for the last week or so, we've had that kind of consistent dollar decline, new low, break of structure, back into value area. And then we've just completely repeated the process again. So I'm sure if you're looking at dollar DXY, you can see that very clear structure here. So for example, last week we talked about that break of structure. We got the flag back up into value area, complete rejection again, new lows again, new break of structure. So from a trending perspective, from a price action structural perspective, very clear order flow, very, very clear continuation structures developing, and very, very easy price action to read, broadly speaking. So of course, from Friday's lows, what happened? We broke through 101, which just so happened to be at the February lows way over here at the 101 index level on the DXY, and we've returned all the way back up into this 102 level, where we started to see that heavy sell-off come Wednesday, Thursday into Friday's bottom. And of course today, following yesterday's kind of top in the markets overnight, tops form, and of course we're trading back underneath this 102, 102.20 level again on the DXY, and back underneath this structure as well. So it'll be interesting to see how does that dynamic play, because of course if we see that indices continue to creep higher, we see that broader dollar dynamic to the downside, that dollar weakness, which has very much been priced into the markets over the last 3-4 months or so, obviously with the back of the geopolitical stuff, the collaboration between Russia and China, the BRICS organization, and of course a lot of countries signing up for the BRICS Plus plan. So you obviously have to look at all of these things collectively, because of course you will have your price action, you will have your market makers moving the markets in a specific direction, but there's also a lot of fundamental stuff going on behind the scenes as well. So that is where the DXY is currently at. So we've obviously broken back underneath this 102 level. I think from a short-term perspective today, we have found a short-term bottom this afternoon, or late morning, early afternoon, into this kind of 101.70 level. And I think that's going to be the pivotal point today, to see how does the price action react in this region, to see if there is any sort of break or bounce, whether the markets kind of progress back up into this upside level where we came from, up here at 102, 102.20, or whether we actually take out this internal structure here and ultimately continue to the downside, retesting these ultimate lows. Now, where we are currently, I think all eyes is going to be on the price action over the next couple of hours to see how does the markets react into today's, obviously, US session open, which of course is just under 2 hours away, just over 2 hours away, should I say. Now, again, looking at that dynamic, looking at gold, right? So gold has obviously been a very, very volatile pair as well, asset. We've had that massive, obviously, break. We had that lovely, beautiful flagging structure. We had the break of bearish order flow back into short-term liquidity areas. And of course, we had that run up into here last week, where we got the next phase higher last Wednesday off the data, creating new highs up here in this 20 kind of 45 2050 level, of course, where we started to see that tops come in. So of course, as the gold tops come in and dollar started to rally back up on Friday, so of course we saw that correlation play out. We saw that stronger gold play off of the weaker DXY on Wednesday and Thursday, like so. And then of course when the DXY rallied back up into 102, 102.20, of course what happened? Gold came pummeling back down into this region where we reacted from initially, which was around that 1980 level. Now, from where we're currently at this moment in time is really kind of depending on price action, because of course we've created this break of structure back into this 4-hour liquidity area here. If I zoom in, you'll see it as well very, very clearly. Initial reaction, new break of structure to the upside, new order flow continuation structure, and trend is very much elongation to the upside. Now, if you look at price action since then, we've obviously had that double tap of this 4-hour liquidity area here, or value area, whatever you'd like to call it, within your structure, and we've had equal lows. So we've had very, very clear formation of equal lows here between this 1980-85 level as absolute bottoms into this kind of 2000 level, where we've seen fairly clear wick reactions from at this moment in time. Now, I suppose at this moment we are creating higher highs continuously. So you do have a higher high here, you have another higher high here, we have equal lows here. So broader trend dynamic, although it's not the cleanest you'd like to see, it is still obviously ticking to the upside. So until price action breaks through this 1980 level, on the proviso that DXY weakness remains, and we see this DXY flow to the downside, well, then you really should be looking at continuation of structure in dollar strength and looking to see, can we break out through this short-term internal break from Friday, this short-term peak high at around about 2015s, because of course if this doesn't give way today, then likelihood is the DXY falling through this 101.60, 101.70 level won't occur, because of course you're looking for that obviously runoff potentially again. So from a 1 hour perspective, if you're looking at the order flow here very, very quickly, you can see here a very, very clear decline into prominent 4-hour value area, liquidity area, order block zone. Very, very clear dump and run again on Monday with a sharp V-shape reversal. So this area here, I think, is going to be pivotal over the next day or so to see how does the market dynamic react accordingly. So just worth keeping that in mind as well. Now, quickly moving on, Euro USD as well. So the order flow is just pretty much inverse to what we're seeing in the DXY. So DXY is obviously 4-hour structure, low, high, back into value area, new low again. Euro dollar is at this moment in time creating that same pretty much structure. So obviously highs, pullbacks, marginal new highs, another pullback, new highs again, another pullback. Now, the only thing I would say is we're not taking out the absolute liquidity area. So like if you're trading specific order blocks, you've got this one here, you've got this one here, both unmitigated. You have this one here, which obviously got this massive run up on Wednesday and Thursday before we had that dump back down on Friday. And of course, coincidentally enough, market dynamic has held this area here pretty cleanly. So I would say if we do see any sort of dollar strength, most likely it's back into retest this area here, which means Euro USD flowing back into this 109 handle again. So worth keeping an eye on that in the back end. But also if you look at the short-term price action from, let's say, Friday's close into where we are this week, you can also see that, yes, we've had a clear reaction from prominent level, i.e. 109. But when you look at the isolated price action here from last Thursday or last Friday's highs, very, very clear bearish structure, straight line decline, bit of consolidation, break of short-term structure back into value area, rejecting this area here, flows down to this 109 level. And of course, price action comes back up to mitigate this 109.80 level. So I think today is very much break or bounce. If we react to the downside, you're really looking at another move back into this 109, 109.20 level. And of course, anything above 110 really instigates further progression in euro dollar bulls, most likely. And of course, that means then that the likelihood is that DXY would be breaking through this 101.50 level, which would then be instigating this next potential runoff zone back into potential new lows again at the DXY. So just to kind of being clear, having clarity, I think is obviously the most important thing at this moment in time. GBP USD at the minute is obviously less clean. When you look at order flow, initially it was very, very clean. Obviously straight order flow back up, new highs back into liquidity area, new highs again, back down, new highs back into liquidity area or next to it. Kind of key prominent value area around 123.50. So again, GBP USD is very much like gold in the fact that we've created highs back into value area, new highs back into equal lows, and we've seen a fairly prominent reaction. So I suppose GBP USD is an interesting one here because, of course, when you isolate the 1 hour structure, you can see how the fact that we have created marginal highs, we have come back down to mitigate the bottoms or the lows of the area, not the actual order block, but the lows of the area. And if you look at this piece of price action structure, we have taken lows, V-shaped recovery back up, taking out this consolidation from Friday's close, Monday's open. We've set new weekly highs this week. And the market dynamic has technically broken this internal structure. So if that was me now, I'd be kind of looking to see if there's any sort of pullback, one final move back into this value area to see if there's any sort of reaction down here, and then look to see could we can progress higher. Because of course, if you're looking at it from a structural perspective, we have taken out this area here, and we have kind of formed a short-term top as we speak at this moment in time. So worth keeping an eye on that dynamic over the next day or two. But this area here should be interesting to see if we do get a little bit of a pullback back into here, see if there's any sort of reaction. And of course, then your invalidator, if the fact is that if these lows are broken out here at 123.50, then the likelihood is you go back up to your 4 hour structure. You've got order block here around 123s. You then have a secondary level down here at 122.50. So they become downside targets should this low actually not hold up, whereby we get actual dollar strength coming back into these markets as well. All right. Dollar yen is quite interesting as well. So dollar yen, so a bit messy, but we can kind of go through it. So this is something that I was looking at obviously over the last few weeks. We've had very, very clear directional bias to the downside, clear trend structure in dollar movements broadly speaking. We've created trend structure into this macro bottom here at 130. Didn't obviously come into this 129 4 hour level, but we did form this bottom above at 130. Got the internal break of structure or break of structure out of this initial move here, but then the broader swing structure here of lower high, lower high, lower high was broken because of course we got new highs, new absolute highs, and then of course we got that pullback into liquidity area here around 131, and then of course we've basically assimilated this change of trend directional bias, because of course what goes down with bearish trend must go back up eventually. And of course we've got high into low, new high, marginal new high from again, marginal new low, and of course we've created a new high again with the next logical scenario, meaning that price action most likely will probably pull back somewhere into this region down here. And I think this 132.70 level does become very, very interesting. Somewhere down here would become quite interesting. If you bring in your fib structure from swing low to swing high on the retracement downside, you're coming in here at around about 132.60 to 133. I think that area here becomes very, very prominent, and thus worth watching to see if there is that downside continuation on the retrace. At this moment in time, very much looks like it's intact. If we bring in the 1 hour structure, at this moment in time, again, you can see that buy side imbalance back into local highs, consolidates, breaks out to the upside, and is now coming back down into the short-term 1 hour area here. So worth keeping an eye on this, but I definitely think that if we break through this area here, break through the 382 fib trace, you're really looking for mitigation of this buy side imbalance here, which of course the fair value gaps, and of course just kind of mitigating this order flow that obviously took place from Friday as well. All right, so that's the FX markets. Indices moving across very, very quickly. Indices have been fairly choppy, back and forth obviously on Friday. Now again, you have to factor into consideration that when you have earnings season, the index movements are not as clean as you would expect when you use traditional market correlations, because of course you have to contend with market movements off the back of the earnings reports. So obviously at this moment in time, indices are doing quite well. They're garnering upside bias, and of course that's off of this much weaker dollar over the last couple of weeks or so again. So indices are still doing relatively well, broadly speaking. We're heading back into this 4,200 level, which of course, if we go out to the highs, was the February lows. It looks like price action is going to try and take out this region here at the minute, because of course when you look at broader order flow, not too dissimilar to what we're seeing in dollar yen, broader trend to the downside, internal structure gets taken out. Then we have highs and lows, highs and lows, highs and lows. So we're gradually kind of working our way into the upside. So we're trying to take out the February highs. And then if we take out February highs over the next week or two, you're really then setting your stone back into the August lows or August highs, which was 4,300. So you've got 4,200, 4,300. And then you start working on 50, 100 point intervals if you're trading the S&Ps. Now, again, you have to obviously look at broader dynamics, because of course, S&Ps is grinding higher. Nasdaq very choppy over the last few weeks, trying to grind higher as well. Really since kind of the early parts of August, we've been very sideways between 12.9, 13.1, 13.200, and we're trying to climb higher again. So again, similar to the S&Ps, we have August highs here. Now, of course, we are trading above the February highs in the Nasdaq, which is showing the February highs. Nasdaq, broadly speaking, has outperformed the S&P over the last 3 months or so, right? Broadly speaking, this is where the S&Ps is in comparison. So you can kind of see that the Nasdaq is a couple of percent outperforming. And again, of course, if we take out 13.2s, you then start looking at broader trend. And of course, this was the massive sell-off that we have. So it looks to be bottom forming, very, very clear. Order flow now to the upside. So then it just becomes a case of, as long as the buy side trend is intact, buying the dip, if you're a longer term trader, it becomes the more logical scenario, because you're just waiting for those retracements. And of course, Dow Jones, similar to the S&Ps, very, very clear recovery over the last few weeks, and obviously the Nasdaq as well, working itself back into this 34,200, 34,300 level. And that's obviously something we've talked about over the last weeks. Very aggressive break to the downside, found bottoms here around 31,500, 31,800. We've had a very, very clear upside buying into the end of March, beginning of April. And over the last few weeks, we've just kind of started higher back into this prominent value area, which, as I said, around 34,200. So worth keeping an eye on that. Now, the Dow Jones at this moment in time, if you're a day trader or short-term trader, is creating kind of wick high tops as well. So the order flow is still obviously grinding higher. If you look at 1 hour structural price action, very, very, very clean, because of course we've got break of structure to the upside back into short-term value area here around 33.6. Another buy side imbalance, creates tops back into value area, mitigates this absolutely perfectly on the 1 hour chart. And of course, what happens from there, we actually grind higher to create new highs again. So you can see how this order flow kind of structure is actually playing out or materializing pretty well on the order flow as well. So S&P, Nasdaq, Dow Jones into earnings season is actually doing relatively well. Gold also on the upside. Dollar at this moment in time continues to remain in the downside play. And of course, that fundamental global narrative of weaker dollar is very much assimilating and continuating as things stand as well. Now, of course, with that weaker dollar play, we have seen broader markets in Europe do excellently well as well. We've seen FTSE return back up into the 7,900. So this 7,900 level we've talked about for last week's very aggressive sell-off finds the bottom, breaks the structure back into value area, and then we set on this massive big road recovery, like kind of what we saw here at the end of December into January, and then obviously into mid-February, where we went from 7,350, 7,400 all the way up to 8,000. The FTSE has done the exact same again, finds its bottom mid-March, and from the mid-March to the 18th of April, as of today, we've had another kind of 500-600 point rally. So you're getting very decent swings if like over a 3-4 week period, some very, very decent moves in some of these European indices. And of course, the same plays out in the DAX. The DAX found this bottom here, 14.5, broke structure, came back down to value area. We talked about it last week, and obviously over the last few weeks, gradual climb higher, has taken out the structured range from the end of January highs at around 15,600, 15,700, and we've just continued to turn higher. And of course, what's happening now, we are working ourselves all the way back to the previous all-time highs in the European indices, found our bottom way down here, obviously the internal break back into value area, and from then at 12,000 we've just been on a complete runaway train since the latter ends of November, where the markets has rallied nearly 25-27%. So European indices at the minute very much outperforming. So it'll be interesting to see, as we see the Fed halting or reducing the reduction or the increasing in rates, and obviously looking to pause, will we start to see the US indices start to aggressively move up to try and close some of this outperformance differential between what European indices are doing and what the US indices are doing as well? So that narrative is something to really worth keeping an eye out on once we kind of navigate through this earnings season, and of course once we start to navigate through or after May's Fed meeting, where if we start to see that pause, then you can probably start to see risk orientation to the upside again, which obviously will that mean probably continuation in dollar weakness, outperformance in the likes of gold, euro, pound, and we'll start to see those movements continue to play out. But of course, let's see how that dynamic continues over the next couple of months. Last but not least is Euro Stoxx, and Euro Stoxx is now trading at all-time highs. So Euro Stoxx is actually outperforming the DAX, because of course the DAX is still under previous all-time highs, whereas the Euro Stoxx is outperforming. So Euro Stoxx is probably outperforming the DAX by about 3-4%. So it shows that on the volume, or the more volume Eurex quoted Euro Stoxx, the more heavier volume traded Euro Stoxx is definitely outperforming the lower traded DAX as well. So worth keeping an eye on that dynamic as well over the next few weeks. But of course, at this moment in time, DAX, Euro Stoxx very much grinding to the upside, which is obviously good if you are a stock market trader at this moment in time. All right, so folks, that's pretty much where we are for today's market update. So quite a decent lengthy market update today, obviously with earnings season, obviously with the data, current updates within the market dynamics as well, and obviously correlations between the different asset classes. So of course, this week, as I said, we've got a lot of data coming out. We also have earnings season as well, so we do need to be conscious of that as well. Just navigating around this volatility, making sure you've got a risk orientation, making sure you've got clear emphasis in your trading plan, knowing what your daily exposure is, or how frequently are you trading in the day, having clear control over your risk, because of course the more control you have over your risk, the better your performance will be, and you'll be less likely to fail evaluations with the different prop firms that you're trading on at the minute. All right, have a great week, everyone. Trade safe, and of course we will all catch you at the end of the week. We'll be looking to do a secondary update at the end of the week, just to kind of navigate how the first full week of earnings, and of course the movements off of some of the prominent CPI figures and market moving figures, both Tuesday today, Wednesday tomorrow, and of course Thursday as well. Have a great week, everyone. Trade safe.